quiet for the next hour, and I'm gonna have to figure out how to do this. The ADHD brain's gonna do it, right? So,
all right.
much love. Everybody, drop a heart in the chat before we start. Engineer's out here taking time out of his day. He wants to help you guys and support you guys. So, without further ado, hermano, take us away.
Okay. So, hope you are doing well. Let's begin with this presentation. First of all, I want to talk about how to use properly this function that the tool has, that basically you can see very easily the overnight price action here on the chart. First of all, you can see the chart. Please tell me in the chat if you can see it.
Yeah, we can.
Yes? Okay. So basically what I do is, yesterday I had a question in my DMs, how to identify the profile, or if we are going to fill the gap, rebalance the gap, or we are going to, or which profile is going to be presented during the session. So basically, for me, the overnight price action only has 3 functions. Okay. So basically, could consolidate, can induce sentiment in the market before the 9:30 open, or just could distribute previous orders. Okay, so this is the 3 elements that I always consider in the analysis that I do on the overnight price action. Okay, so I have I don't know if you have studied the ICT profiles that he mentioned. Basically, what I try is to trade 3 profiles. I have like 3 specific profiles that I like to engage within the gaps. Let me put the here in the chart. I don't know my. Wait a minute. I don't know what happened. Here we have. Okay, so. Okay. So ICT has six profiles for intraday profiling. For me, profiling is really important because it's the easiest way to anticipate the market conditions and what the market can do during the day. So these are the classic six models that ICT or profiles that ICT mentioned. So what I did is I studied which profiles are better in order to take risks in the market. So for me, the best three profiles are the classic buy day, the ICT range to New York London close rally, or the consolidation and rates on news release. Basically, these two profiles are very similar, and also the ICT, the London swing to New York or London close reversal. These specific three profiles are very easy to spot with the RTH gap. Okay, so what I do is I identify specific elements of each profile this week we have this model has not presented, but okay, so when we have like a breakaway gap or a bullish gap or a bearish gap that is open, and you are opening far from the previous close on the settlement price here. This is the previous day close here. So if I see that we are expanding towards another high time frame level, could be a previous weekly high or a new week opening gap or a new month opening gap. So I am anticipating that we are going to have this specific profile. So this is the ICT classic buy day, but the way that I use it with the gap is basically when I am anticipating this profile on the week, I'm not expecting to close the gap. Okay, so I am anticipating a little projection into the upper quadrant, or 50% is like enough. But if you see like only the market protracts to the upper quadrant of the gap, it's enough to continue the movement higher. So basically, to identify this profile, you should look for what the previous market on close did, or from where is the market coming. This is very important. So basically what I do every day, and you already know the previous live streams I mentioned this, is I see or analyze what happened during the previous close. So on this specific day, for example, we reached the consequent encroachment of this gap, and we were trading discount relative to the event horizon and the weekly range. Okay, this is, I'm measuring the from new week opening gap to new week opening gap here. So this is the event horizon, 75% upper quadrant and 25%. If you see the anatomy of this is the same like the regular trading hours gap, sorry. Okay, you have the open, the close, the consequent encroachment could be like the event horizon from this gap, but in this specific from the weekly profile, I used it like this. Okay, so quadrants from the event horizon and here. So we were trading in discount below here of the week, and we reach this gap that was open. We tap into the consequent encroachment, and now we are leaving the gap. So by this day, I'm opening above the previous day open. In close proximity, I'm not anticipating that the market is going to reverse because we are coming from discount on this day. So I know that we are going to have a classic buy day. I'm not using like if London made the low of the day or just what I'm looking is what the previous market on close did, and if I am opening could be close to the previous day open, or maybe we are opening outside of the range. Sometimes we open outside of this high, and I am anticipating that the market is not going to retrace to the lower quadrants of the regular trading hours gap. So this is really good because you are looking for longs or to position yourself in early during the opening. So this is when the opening range that cold brew trades, it's when the best performs this specific layout or profile, the classic buy day, because the market basically opens and start to move aggressively to the same direction. So if you are trying to fade the gap on this day and you are trying to short during this day, you are going to lose a lot. So you have to be aware of from where the market is coming and identify the profile of the day, basically what with the overnight price action. And you are using where is the profile presenting in the gap matrix. Okay, so because the gap is this specific layout is presenting in above of the equilibrium of the event horizon of this range, you should look for longs only for that. So this is one specific profile, okay, that I like a lot. This is good. Obviously you are not going to see like every day that this specific profile, because the market is not going to do like 3 or 4 gaps like this. I think that previous weeks actually we had like 3 days like we were opening the same. Yes, this day was one, and these 2 days, 3 days. See this one, and this one. It was a really bullish week this day. So on trending markets, you are going to see this profile a lot, that the market is gonna stay open, and this is fine because they are going to use this gap later as a draw liquidity to rebalance or mitigate this gap that it's open. Okay, so this is one specific profile. This is the classic buy day, but you are considering the gap on this profile, and the elements or characteristic is usually they are distributing orders that were accumulating during the previous day close. Okay, and this model most of the time is presented from Monday to Wednesday. This is where what I'm looking from, Monday to Wednesday. This. Okay. This is another great profile that I really like to trade. If you want to take a screenshot or something here, but the video it's gonna be recorded, so it doesn't matter. On this specific day is when the market is opening in the same direction that the market is performing during overnight price action. And you can combine this specific profile with standard deviations and time. Okay, so the elements of what overnight price action is doing in this specific profile is inducing sentiment before the market opens. Okay, so and is this a specific day? And this week was presented during Tuesday, you see? So overnight price action creates a consolidation during the London session and the low of the day here. So many guys could think that we are moving higher because London made the low of the day. And when the market opens at 9:30, you can see how the market is moving and in the same direction as the pre-market and the overnight price action. And we have here time and projections from this specific model. So the market opens, we reach one standard deviation and the first presentation from Monday here. Okay. Then we anticipate the standard deviation could be the standard deviations are not like the same rules that Dexter has for his models. Okay, because depends a lot of the size of the gap of the current day. Okay, so in this specific case, we see that we are reaching the one projection. The profile is aligned with these specific elements. Overnight price action is inducing the market to long, and we gap higher. We reach here and a macro, and then the market reverse, completely take the sell side liquidity from overnight, and we reach a high time frame element here. That was also between 1.5 and 2 projections of the gap here in discount this specific day. So this is another profile that I trade. This is a beautiful profile. So now we have London fake low of the day. Basically, the market reverse, and the traders are trapped in longs here because they think that London made the low of the day. We reached a standard deviation in time. You can combine a PDRA if you want it from previous daily range. And then we close completely the gap here. And we reach discount. So this is the way that you are combining all the elements of the tool. You have overnight price action. You can identify this really easy to spot. You have standard deviations, and you have also projection for targets, and so this is nasty framework for your trading. This is another profile that I like a lot. The other profile that I like and I look to trade is this one. So the elements for this profile is the market is inducing sentiment. We look for this from Monday to Thursday, because this when you see this profile on a Thursday on Thursday, you can hold the trade basically all the day. Okay, this is I like this a lot on Thursday reversals. Okay, so the third element that overnight price action can do is, now we have the distribution of previous orders when the market on previous market on close has reached a key element, and now we are opening above of the previous settlement price, and we are anticipating a classic buy day. We anticipate to reach the upper portion or the consequent encroachment of the gap, basically. Okay, this is the first element. The second one is when the market is inducing sentiment before the market opens. This is the profile that what overnight price action is doing. And the third one that I like is just when the market consolidates. And this is really simple. Basically, you can see that during overnight price action, the market is just consolidating, and when the market opens, we reach, usually when this profile, the gap is not that big at all, like on these specific days. So you have to be like less, your target should be more, I don't know, less ambitious during this specific profile. Okay, so the market consolidates in overnight, and what the market is doing is creating a small gap, and the same, we reach a standard deviation, a macro, and then you are looking to closing the gap, and sometimes we just reach the gap, we close the gap, and the market start to consolidate around this and becomes like a seek and destroy profile. Sometimes this specific model, it's going to be like a reversal profile, and then we are going to take like 2.5 and 3 or 4 even standard deviations of this gap. But this depends of the day of the week that you see this profile, and if you have like a high impact news and during this specific time and this you reach like a high time frame key level, or you're reaching like yes, something relevant, then you can trust that the market is going to expand a little bit more higher. Okay, and yes, so this is, I will expand this a little bit more. So you have here the previous market close, consolidate, the market opens, move lower. When you will have like relative equal highs here or here from overnight, and then you can trust that the market is going to take the liquidity from overnight and close the gap. So this is basically the 3 profiles that I'm looking to trade. You can have like this profile also is good, like the ICT London Switch 6 and destroy. This profile is good for like total soup entries. I don't recommend this, but basically you are looking for the opposite sides of the range, and you are looking for to take the liquidity from the opening range from the first 30 minutes of the session. You are going to take the high, and then you are going to take the low, and the market is going to consolidate between that specific range. And you can take like little scalps here. Okay, so this is the way that you can look for profiles from overnight price action, and with the gap framework, standard deviations, and yes, I have my alerts here. Now, for example, here we can, which profile is presenting during the day. Okay, so I don't know if we can, like, it's like this profile. Okay, overnight price action is moving lower. We have here the new week opening gap, and we can reach discount of this range. This is the previous regular trading hours range here. So from previous regular trading hours range, we are opening exactly at the 50% of that range, you see? And we are creating this gap here from the previous day close. So what can happen is that we move lower at the same direction that overnight price action is presenting here. And below the market, we have the new week opening gap and the first presentation from yesterday here. Or we can reach, if we are moving below the new week opening gap and we close below here, we can reach also the lower quadrant of this gap. But let's see what price action is doing. Remember that this is the liquidity from the news. We have here, you see, news. This is the PPI buy side liquidity here. So you don't try to short here. Why? Because the market could move higher to rebalance the gap here. Okay? So this is the way that you can, how you, with your profiles, you are anticipating certain market conditions, and you are not going to short here. Even if the market moves lower, I can't, because of my profiles and the models that I'm looking, I can't look for shorts here because the market could reverse and take me out. So it's better for me to look for discount of this specific range and maybe look for a long later on the day. Okay? So yeah, I have my alerts here. Let's see. The Dow has completely closed the gap, and the Dow has been trading below the new week opening gap from all the week. And Nasdaq is trading above the weekly opening. You see? Discount, premium, fair value. So we can reach this area here. And ES now is trading below the weekly opening. And now ES is reaching like the previous regular trading hours range here. You see? So ideally what I will look for today is trade a discount array or a price fair valuation here, and then look for a reversal at least. I'm not expecting like taking the highs completely because the day of the week, but we can maybe come back to reach the lower quadrant of this gap, or just tap here above to take the buy side liquidity from the overnight, the pre-market hours here. Okay.
Armando, you moved your 15-minute first presentation, by the way, by mistake. I just want you to be able to be aware of that.
Okay. Oh yeah, you're right. Thank you. 5 minutes. This is on the 5 minutes. This will be on the 5 minutes. This, for example, here, look in the 5 minutes, how the consequent encroachment of this first presentation of 5 minutes, it's aligned perfectly with the consequent encroachment of this new week opening gap. Okay, so this is like an algorithmic signature, and you can see for this is something that I like a lot to see. You see? What do you mean by first minutes? No, this is the first imbalance that was created during regular trading hours yesterday on the 5 minute chart. So here I have the 15 minutes chart with the overnight price action and the gap and the weekly candle. Here I have only regular trading hours. I don't have overnight price action on this specific chart here. And this on the right side I have the 1 minute chart and the same elements. But I like to have like the 15 minutes open and the macros here below. So in this way I can understand if I am premium or discount of the 15 minutes candle open. Look how we are respecting perfectly here the half deviation of this gap and aligned with the consequent encroachment of the first presentation of yesterday. And then we are moving higher. So that's the reason why I don't short this specific profile, because I have buy side liquidity resting above me and I have the gap open. So trying to short this makes no sense at all. Okay. Yes, basically I trade during the macros. Today I'm not going to take a trade in front of you, but yes, I trade macros. Yeah. So you can, I don't know if you have questions about the profiles. Basically those three models are the ones that I am streaming. Okay, the first presentation, fair value gap. It's really simple. Basically, it's the first gap that is created during the regular trading hour session. After the 9:30 opens, you are looking for the first imbalance. I personally use the 15 minutes, 5 minutes, and 1 minute. Okay. Yes, all these are ICT concepts. Just the framework and the profiles, and it's like something that I combine. It's not like ICT talk about how to use the gap and these specific profiles. This is the way just I do it personally. what time do you usually confirm the specific daily profile? Yeah, by the 9:30 opening, I usually already know which profile is gonna be presenting during the day because I know what overnight price action did. Okay, so you can wait the first between 10 and 15 minutes of the open to see what the market is doing. To yeah. Do you have any documentation for your models? Yeah, I'm working on it right now. In this specific moment, I'm doing all the documentations for the models. Yeah, it's gonna be released soon. Um, with question, at what time do you usually confirm the specific daily profile on a daily basis? Yeah, yes, I already answered that. Basically, the first between 10 or 15 minutes of the open, I already know which profile is going to be presented. For example, I don't like for these specific profiles, both these where are the draws? Yeah. Usually, those two specific models, the market is fast when the open is fast when the market opens. Move aggressively to induce the market here, and the market reverse. And this is the market opens and start to moving aggressively to the opposite side. So I already know that none of these profiles are gonna be presented today. So it's this one, see, because I have buy side liquidity from overnight. I'm looking for discount PRAs in order to rebalance the gap for today price action. So ES is now trading at yesterday open at 9:30. This is the gap, you see. So ES is weaker in comparison with Nasdaq. We are trading above the market, and here, sorry, above the weekly opening, and we are trading here below the weekly opening. So ES has been weaker during today. And look, Dow Jones. So now we take previous daily low. We reach 4 deviations of yesterday projection here. And now we are moving to attack the buy side liquidity from previous market on close here. Yes, the first presentation must be formed after the 9:30. Not if you are measuring or considering the 9:29 candle, it's not like that. You have to consider exactly the after the open. So this is not a first presentation. This is not. Okay? Because you are considering the one candle before the market opens. So on this specific open, we are around 15 minutes of the open, and we have 0 gaps. So this is a sign that the market is just trading between the regular trading hours gap and the first presentation from yesterday. Yeah, when we open at the 50% of the previous range, and we usually have this kind of opening. Yeah, no fair value gap, no displacement, no speed. Yeah. Are you expecting to long or short for Nasdaq? Um, if I will long, I will look discount first, and if the opportunity is presenting during the macro, I will take it. Yeah. Do you have any insights for the data low? Does it need to be taken? No. No. Do you value new week opening gaps on settlement more than the RTH? No. I have both of the new week opening gaps. Here, for example, on the 5-minute chart, I use the new week opening gap indicator here on the regular trading hours chart, and it will plot the regular trading hours new week opening gap. So I like to have both. Yes, sir. That's a gem. This is the sell side liquidity from the news release. Yeah, just tap into the new week opening gap to the tick here. Yeah. Yeah, discount from the previous daily range. That's important. You have to understand that you have like different discounts. You have discount from the weekly range, discount from the actual opening. So this is a regular trading hours range. Okay. Between yesterday gap and today gap, this is where the equilibrium is found, or the band horizon, if you want to call it like that. Okay, so you have between this regular trading hours gap, yesterday regular trading hours gap, the band horizon or the equilibrium between both range is below here is discount. This is how I use I use the premium discount. Okay, so and I have fair valuation from the weekly opening. This is the new week opening gap. So if you want to short, you want discount prices in order to buy something cheap, and something cheap from today is found below this specific level here. Okay, it's not something like I believe this is just simple logic. Opening from today and yesterday, you have the equilibrium here. It's the event horizon. This is where fair value is found on this specific day. Okay, and you are combining the fair valuation from the weekly opening in order to consider that. So you have standard deviations here. Yes. So you have to demand your profiles and your setup. when you say event horizon, which two gaps are you referring to? Yes, the event. From that from that example, I'm mentioning today gap and yesterday. It's like, yeah. Look how beautiful we are. Are we respecting the consequent encroachment of the first presentation here? Yeah, this is insane when you actually understand it, 100%. Yeah, the indicator is all the indicators that I have in my chart. All of them are from the best coder in the world. It's Toodegrees. You can hear it's the macro tracker here. It's nice. You can basically turn on the macros that you want to monitor. The templates. Where can I find the weekly profile? Just look for Google and look for ICT templates, and you're gonna find like 100 screenshots of the ICT profiles. But you should study them on the core content. Nice job. Look, the first presentation. It's inside the macro. This is the first presentation of on the 1 minute. When you say, yeah, sorry, let me see. Yes, that's the image. How does the size of the gap impact standard deviations? Okay. Yeah, this is something that I've been I use. Obviously, it's the size of the gap is different every day. You can look, for example, here. And you can see the size of the gap of every day. It's quite different basically every day. So having like a specific rule, like to reach the specific I don't know, 1, 2, 2.5. The most repetitive signature that I have seen is around the 2.5 and 4 standard deviations to reach like the max delivery for the actual day. But obviously the standard deviations are just a symmetrical projection of the fair valuation or the gap that has formed during the day. So you have to use it like as a extra confluence for your current daily profile and your expectations of the market. That's the way that you can combine the logic of the projections and them. It's not like, oh, just because the market touched the 2.5 standard deviations, now the market should reverse. That's the way. There is also a small gap between 9. Oh yeah, you're right. Actually, this is the first presentation. Almost insignificant. But yeah, you're right. Thank you. Yeah, so imagine shorting this and taking a long here. Obviously, you can, for example, this, we are in a macro. This, we took this little short and low here. And this is a reaction block. %, the reaction block. Now we're trading up here, but because I'm not in discount, I don't trust this as a long. Okay? But this is how if I were taking a long, this is how I read the macros. Basically what I do when I'm trading the macros, I trade the 950 macro, sorry, 1050 macro, and sometimes I look for setups between 1020 and 1040. But yeah, we reach now the reaction block, we run the short and low, we are trading above this high, we displace higher, now we're retracing to the first presentation and we have the gap open above us. You see? And we are trading at the first presentation of yesterday on the 15 minutes. You see why you should not short when you have buy side liquidity resting above you and the gap. It's dangerous, and the profile is pointing that it's not going to melt like another days. This is the OTE. look how we tap into the between this low and this high that we take here. Many times what the market does is we retrace into the consolidation, into the equilibrium before expanding high, in case that we are going to do that. But let's see what price does. Yeah, actually 2 of the streams has been something like this. It's crazy, but it's fine because and having the ability to anticipate or this kind of profiles, it's better than trading like fast markets. Yeah, now we're moving lower again, so you see it's this is the opening range, sell side liquidity, the liquidity pending from the first 30 minutes opening. So we have this is the high of the session here, and this is the low. And the first 30 minutes of the session has been a complete time distortion or consolidation here. Sometimes what I do is when I see that one macro, for example in this case the 950 macro, it's consolidating, the next macro should deliver something at least. But yeah, basically time distortion is something like this. Price is basically, for me, time distortion is when the market is not allowed to move and generates a consolidation. So it's basically almost the same thing for me. ICT has a different maybe ways to explain that, but yeah. Now I gave the idea, can I get it for free? Yeah, time distortion, knowing when regular trading hours and electronic hours we have interacting signatures. Yeah, there you have the answer that just gave. So basically, consolidation is price-based link with time filters for high probability conditions, and time distortion is basically the signatures from regular trading hours and electronic trading hours. Yeah. Look the bodies of the 15 minutes candles. This is nasty. Inside wick, inside candle here. You see? This is something that Chris talk about a lot. I don't know if he's inside of the Discord today, but yeah. Inside candle, inside of the opening range, we take the sell side, we are trading basically here. Now we are maybe moving higher, and then look how we are building that sell side liquidity. You see, from the market pre-market or news release. And if you are retail, you see that price is a strong resistance here because it's not willing to move lower. Then price is gonna be moving higher, taking longs will be trapped, and then we are going to take the sell side liquidity. This is classic. until market ends and where the move should look to have set its structure and deliver holding its equilibrium. Yeah. I like this to have like a countdown for the candle because you can see the time that the candle has available. We have 6 minutes for the next 15 minutes candle to close. This is a classic double purge here. Look. We take here this stop rate and we take here in the same move we take stop rate buy side and sell side. When I see this price should retrace now to the discount in order to move higher, but this is when the market is reversing. This is a profile in the structure that I like a lot to trade when I'm anticipating a reversal, and we have like this specific that we purge the buy side and the sell side, then the market reverse. But when the market is aligned with the time of the day and in a key level, but on these choppy markets it's not like very good. Yeah. Let's see what the other markets are doing here. Now ES is trading at the upper quadrant of yesterday gap here and is reaching 1.5 and 2 deviations from yesterday. But look, we take buy side liquidity above the market open, the new week opening gap, sorry. Yeah. So now we are coming from a premium array and we are having this gap. We can move lower and create this and hold this gap open a little bit more. But Nasdaq is trading at the fair value of the weekly opening. So sometimes I see a lot that the market trades around this level and can trade higher and then move lower and something like that. But yeah. Yeah, I don't have hair in my head also. Imagine. Now we're trading below the sell side liquidity from the news release here, and below the sell side liquidity from the opening range here, and we are reaching the first presentation of the 5 minutes yesterday here, and we are trading now below the new week opening gap here, and now we are reaching almost one deviation from the gap. Yeah, this is not financial advice. If you took a loss, you deserve it. Now, beautiful. You see how we are trading below the fair value that I told you between the yesterday regular trading hours gap and today regular trading hours gap. We are basically trading below the event horizon or the equilibrium of that specific fair valuation range, and we are trading at the first presentation of the 5 minutes from yesterday. We are just a little bit outside of the macro window, but if we are going to reverse, we should look for the formation of that swing point. This is basically what MMX, the market maker models, is. So you have now just one candle here, and this candle is printing. If you are going to reverse from here, we should respect the wick of this candle. So this is how you should wait to see what the candle is doing when the candle is forming, how we are closing this candle. And we have 13 minutes from this candle to close. So that was a beautiful reaction here. First presentation. This could be a reaction block here if we are going to move higher. Do you see here? This I'm gonna move this a little bit here just to see how we are trading into inside of the new week opening gap here. We have S&T on ES. you see how we are trading at the consequent encroachment of the Monday regular trading hours gap here. Yeah, this is an SMT obviously. We are trading below the 930 opening here. But we should wait to see if the market, this candle, respect that swing point that I'm telling you. Beautiful. You see? Shorts were trapped and we have buy side liquidity here and the gap is still open. Now, when this candle closes above this down candle, this is an order block here. And this is the most sensitive part of this order block here. This is random. Do you see how the guy that wanted to, who was the guy who wanted to short? That is your short right there. You are now at break even basically, or you're gonna. That's why you should wait for your profiles, the things that you want in the market to be presented. I told you I wanted to see fair value from the equilibrium of today gap and yesterday gap, and outline basically what the profile could do. Patience, yeah. This is a game of patience and knowing what you are looking for, and risk management obviously. That entry was crazy from Rafael. Yeah. Yeah. Can you talk about the influence of yesterday's regular trading hours gap being left pretty much open on today's price action on Nasdaq? Seeing ES feeling part of the regular trading hours gap while Nasdaq doesn't is something we talked about a lot before. This scenario repeats often. I see it as delayed delivery of today regular trading hours gap for Nasdaq, but I may be technically wrong here. Yeah.
I can talk as well. I just didn't want to interrupt or anything.
No, go on.
Something that I see often, you can see how you were pointing out the SMT, right, where ES is going back into yesterday's RTH gap,
Yeah.
and Nasdaq isn't. So, given Nasdaq is having a little bit more strength, but both did not trade into today's regular trading hours gap, like we would imagine it does off the open. To me, that looks like delayed delivery of the gap for today, and they're just waiting for SMT to pair or to basically trap shorts. Of course, we're not up there yet, but seeing how, ES went down lower, Nasdaq is now closer to today's regular trading hours gap. It's something that, in relation to the profiles that you shared, feels like it's in the same context. Where at 930 you're expecting a specific profile. Here maybe it's something to do with a consolidation news that manipulates and then reverses. So I don't know if there's some sauce here that you can give people, because me and you have talked about this before, but I don't know if there's anything else you want to add in terms of expecting exactly if and when there's going to be a retracement into the gap right away compared to right now where it looks like it's being delayed.
Yeah, yeah, I'm agree with you. This basically you cannot. Maybe it's because the behavior of yesterday price action. We had a very large training day, so they use the first minutes of the day to build like that sentiment for the market or trap traders into shorts like here, because they are trying to fade this gap here, this bullish gap here. But because Nasdaq is stronger, you can see that uh, by the fact that we are trading above the new week opening gap here. So NES is trading below. So Nasdaq is already, we already know that is stronger doing this relative strength analysis with the gaps here. And you can see how this is a balanced price range here on ES basically, and this gap. So we shouldn't be trading oops, here below here. So because Nasdaq is stronger, we can anticipate that we are not going to completely retrace into yesterday regular trading hours gap. And now we are trading, taking the buy side liquidity from the guys who short the opening. You see?
Absolutely. That's why I was pointing at the brick wall, as Josh calls it, right? Where
Yeah.
you have the regular trading hours overlapping, creating that balanced price range.
Yeah.
It's exactly what I was pointing at. So
Yeah.
that's beautiful.
Yeah, that's a beautiful confluence for today. And look how we trade beautiful into the new week opening gap. We drop shorts, and we are retracing into today's gap. Yeah, beautiful. Now, if you, for example, if I were taking a long here, uh, I usually take partials inside of the gap. Okay, so this is a lower quadrant, and you have the consequent encroachment aligned with this week. You see, so you can use these levels as a point of interest for partial taking if you trade. Look, this institutional order flow entry reel here inside of the 10-20 MAC time window that sometimes I trade. And now we are taking the buy side here. We are reaching the lower quadrant of the gap, consequent encroachment 75%, and this is the new day opening gap. So I don't think that maybe we can obviously, because Nasdaq is wild. Don't underestimate the craziness of Nasdaq, but this is where yeah, never say never with Nasdaq. Yeah, 100%. So yeah, you take partials here at the consequent encroachment above the overnight buy side liquidity. Okay, yeah, I have my alarm here. The lower quadrant of lower quarter was hit. Beautiful. Now we are reaching the, let's see if we dip into the consequent encroachment. Thanks for your market analysis. Just amazing, your reading. Thank you, man. I appreciate you. I love you, Josh. you know that. Thank you so much. I know my shit. Yeah. So yeah, now you are trading in fair value. Sorry, in inside of the gap. So sometimes you see that we trade inside of the gap, and then we look for discount of this. For example, if the market is not trending like hard, it's not spoiling aggressively. Sometimes we retrace into. We can use this. This could be like a mitigation block and discount, but that's the reason why I take partials inside of the gap when I'm trading like against or I'm trying to fade the gap. You see? Beautiful. That trade is just so clean, beautiful. From Breeze, no problem. Was a good morning. I'm glad that we chop all the opening and we anticipating that and we basically call the move. So it was nice. How many new week opening do you keep in your chart? All of them. Yeah, no, I have like a filter for using them. I have an order of hierarchy using this kind of gaps. I use new quarterly opening gaps, new month opening gaps, and new week opening gaps. How many new week opening gaps? Yes. Yes, I use them. In close proximity, I used the ones that we are in close proximity to them, yes. No, I did some back testing, and when we have like we're trading in a cluster of new week opening gaps, it's better to filter them and have this new month opening gap and the event horizon and the quarters between these gaps, and you can have a clean view instead of having, I don't know, like 30 gaps in your chart. Yeah. Why don't you add the new week opening gap in the indicator itself? Maybe in the future. So now this 15 minutes candle is opening. This is a change in the state of delivery here. And the market is trading open, and we are tapping into this part of this short body of, sorry, this week of this. We could use this as a propulsion block here. Let's see what, but I don't position more orders inside of the gap because I like to trade in discount. I already told you. So this is just for tape reading. If I were just looking for confirmation of order flow. But you are trading above this high and inside of the gap. If you take a long here, price can move lower and you will take a loss. Okay. Sooner than you think. Yeah, it's loading. Based on the profile, we should most of the time close above the daily open. Based on the profile, yeah, but on time of the day, sorry, on the day of the week, I don't consider that because we are on a Thursday, and Thursday is not like a very strong day when we had like previous days big expansion. So you have to combine the profiles with the actual time day of the week that you are anticipating. So that's the reason why I told you that you should look for partial taking into the lower quadrant of the gap, because we can reach only this quadrant or maybe the 50%, because this is something that happens a lot. So you have to be aware of that with the combine them with the experience and knowing when the profile is gonna deliver, it's gonna be better in delivering price. Yeah. Good morning. Yeah, you see? So if you took a long here in this auto block, now you are in drawdown in that specific entry. And you are not, we are respecting here, but that's why I don't like to take trades when we are just so close into the gap, because this is fair value from the current day. Here the 9:30 opening above buy side, we can move lower. So yeah. Look at ES. Yeah, ES. We are trading. Let's see. Look, for example, ES has the 62.5 of the gap. Open. Now we are trading the almost at the 50% here. Nasdaq is trading at the 75.3% of the gap. Now we are tapping into the consequent encroachment on ES.
Someone's got to be having some fun right now. There's no way. Like, there's no way. Like, based off of what's been delivered and shown, like, there's just no way. I refuse to believe. Drop a 2 in the chat if you're actually genuinely confused. So I want somebody to please speak up, because I want to be able to help you guys. Like, this man, the engineer, showed you 15-minute fair value gap. It was crouching. He showed you the 5-minute refinement. He showed you the rejection block entry at the CE. Okay? And then price just instantly moved away from it. Market maker buy model. IOFED into a new high.
Beautiful.
So it's like, all the people that put a 2 in the chat right now that you're confused, please ask a constructive question, and we'd be happy to help you. I don't know if Mr. HS, if you're trolling or spamming, but you're probably gonna get kicked pretty soon. So just control the spam. But I really do want to help someone right here. So it's like, anybody that just put a 2 in the chat that is confused, please ask a question. All right, you're gonna get kicked, Mr. HS. It's been a nice day. I hope you have a wonderful rest of your day. Anybody else? Don't understand? Okay. The orange box at the bottom. The orange box at the bottom was a 5-minute fair value gap, which was refined from a 15-minute imbalance.
Yeah.
From the previous day regular trading hours gap.
The first presentation on the 5-minute.
Yeah, it's the first presentation of yesterday regular trading hour session. This one.
Architect, it's a 5-minute. Yeah.
5 minutes, yeah. And you already saw that I had the alarm here. We are trading at the consequent encroachment on ES here. So, and Nasdaq is almost there. I shared this layout inside of my Telegram. Basically all the layouts that I have for the weekly range, for my daily range, and the lower time frames that I use for execution, that it's this. If you want to have these layouts, you can go inside of my Telegram and grab them. Yeah, would you be pretty much be done for the day after this move? Yeah, absolutely. Yeah, the CE is the consequent encroachment of the regular trading hours. It's basically the 50%. It's like the last point of threshold. Yeah, it's the consequent encroachment. I think that the word itself is telling you. Regular trading hours gap is from 9:30 to 9:30 opening. No, the regular trading hours gap is. This is something. Look here down in the screen. You have regular trading hours and electronic trading hours. Regular trading hours is the session when the stock market is open. It's from 9:30 opening to 4 p.m. Okay, outside of this time window, you have the electronic trading hours. It's all these candles that it's time distortion, basically. Here. Beautiful. Yeah, that's this description that Trader 27 did. It's basically what we did on the live stream. Is there any significance of market on close and current days gap? Yeah, absolutely. It's fundamental to anticipate the profile that you are expecting today. When anticipating like these breakaway gaps or the classic buy day profile. Okay, I thought, but for example, for today, obviously it's always, that's the foundation of the regular trading hours gap. You are measuring how far are you opening from yesterday close. So absolutely, there are. That's the core of this specific framework, the market on close and the 9:30 opening. Notice lack of sync.
Yeah, the NQ didn't tap the CE yet, and ES did. Now we're retracing.
Yeah, that's basically, yeah.
So we're still not in sync, and Dow is just doing Dow things.
Yeah.
YM is just in his fucking fairyland doing whatever.
Yeah. Yeah, I agree. Dow is a completely different beast in this market.
So as we kind of reach this point of the stream, this is about 10:45. We've been on here for about an hour and 45 minutes. I just want to ensure though that everybody that had a chance to ask a question still, was more or less respected. So I want to just scroll up and just see. There's a question right here that says, the significance of market on close in the current day gaps. We've answered that inside the stream, so you could look at that in the recording. That's by Saeed, I think. And then PRZ said that you marked the first presentation for value gap on the 1 minute, 5 minute, 15 minute, or is it just the last day or more? So like that's, again, he looks at it during the current day and then also the previous day. So that's what you saw over here today.
Yeah.
And then Isochroma said that there's stats that are on the first day of okay, I apologize. There are stats that say that after the first 5 hours of RTH, there's 80% chance the high or low is in. Does that influence your trading decisions if the low is the only thing that was taken after the 1 hour, 5 hour mark? I don't know, it's kind of a interesting question. Basically, I guess he's just summarizing as like, do you factor in the statistics of saying that the low of the day is generally in within the first hour?
Yeah.
Hermano, any chance you could answer that?
Yeah.
Yeah.
Yeah, it's basically the high of the low of the day is presented during the first hour of the session. Yeah, that's I don't have the statistics here. Maybe we can ask to Oli with his platform to see and confirm this number. But on my back testing, that's the reason why I trade only from 9:30 opening to 11:20 at most of the day. I don't like to trade like the PM sessions, and I prefer to focus myself during the morning. So because I know that the best trades of the day are gonna be presented during this time window. So yeah.
Awesome. Thanks for answering that. And then someone asked if it's recorded. Yes, we just want to make sure that the recording isn't obviously corrupted and everything's good.
Yeah.
We're like an hour and 45 minutes in, so I just want to make sure that we do wrap up. So there's show an example of breakaway gaps and how you trade it, the buy model. So if you actually go back and watch the previous stream, Saeed, that's one of the most insightful videos that you can get based off of the breakaway gap buy model. We actually went in depth with it on that last live stream, so try to check that out in the Toodegrees database.
Yeah.
We
Yes.
also got a lot of compliments in here, so a lot of people saying beautiful stream and they appreciate it.
Thank you.
People are showing their own responsible executions based off of their own decisions, and that's on them. If people made poor decisions, then hopefully they realize that the market is a learning lesson as well for them, to not be upset at the market, but to also realize what actions they did and what they can improve upon. And like just first-handedly said it yesterday in our Discord, but yesterday was also a very tough day for me trading. So it's just important that everyone knows that like nobody's perfect, but if you're here to get better in the long term, then it's you're going to show up, you're going to take notes, you're going to tell yourself that you're going to be vulnerable in a learning opportunity where you see that there's discernment available to learn from a passion and the strength of another individual that wants to help you.
Yeah.
And then you take it forward. So it's all love. Appreciate everyone being here.
I appreciate you, brother. You know that the trader that I am, it's because I'm a big part of the community that we have, and because of you and Tom. We are like you have to find people that supports you, and because we are all humans and we make mistakes many days, and sharing the things that you are struggling in your life with the people that you trust is such powerful, because you can find like support. And so trading is not only about knowing the charts or technicals, it's about development, self-awareness, and being learning to know yourself, basically. If you are developing or performing well in your expectations and what you're looking for, and you're controlling your emotions, be aware of your thoughts and your behaviors, your actions. So you have to do a lot of things outside of the charts in order to achieve that state of successful trading. It's not only inside of the chart, and that specific thing took me like a lot of time to realize that the answer that I was looking for, it was not inside of the chart, it was inside of me. And I was alone like for years during this trading path, and now I belong to this community that I love, and I'm really I'm really happy to be here and share my insights with you guys. I hope you appreciate this, and it helps you to have a better understanding of what you are looking for, and to improve your knowledge about the RTH and your trading. Yeah.
Beautifully said, hermano. We really appreciate you, and you're getting a lot of love in the chat. And on this one, I always want people to support, and I always kind of just like nudge people or poke people that it doesn't really take much, but you kind of get it without me even asking, so that should speak wonders.
Thank you so much. Yeah, I love you guys.
We love you. Toodegrees.
So this is I think I will be closing the stream because I have a meeting at 11 with another brother, and so I have to prepare in the next 15 minutes I have a meeting. So I hope you understand, and this will be recorded. I will share this with Josh, and we will be preparing the video to share with you guys.
Toodegrees really appreciates you, hermano. Take it easy. We love you, and thank you everyone for being here. And we'll see you all soon, okay?
Okay.
Bye now.
Bye.